The volume and breadth oscillators, along with the stocks only AD line for the New York composite. Let's run through this real quick. New York McClellan breadth oscillator for the NYA ratio adjusted. The McClellan volume oscillator ratio adjusted for the NYA. The stocks only volume oscillators with a 19 EMA in blue and a 39 EMA in red. And then the stocks only New York AD line. So things have been very interesting with this since the SVB regional bank meltdown. And you can see near the end of March at the bottom window, the stocks only AD line for the New York. You can see it hit a downwards trajectory, so that was bearish. But then all the oscillators had the upwards trajectory, and they were the early warning for price that there's going to be some upside. There was a couple more days of downside, and then it really took off. So the breadth and volume oscillators were doing their job. And again, starting in the bottom window, New York stocks only, you can see the blue arrow here pointed up for bullishness. But then the breadth oscillators and volume oscillators were pointed down for an early warning that there's downside to come. And again, up here in price, there was a couple more days, and then it finally melted down. And then I started paying closer attention in these areas where the EMA 19 was diverging against the EMA 39, which makes perfect sense. Took a little longer for the EMA 39 to get on board, and it certainly did for some downside, along with the New York stocks only AD line down in the bottom window. And again, starting in the bottom window, stocks only AD line is pointed down, dashed red there. And then the breadth and volume oscillators started pointing up again, not the 39 EMA in dashed red here for the stocks only ratio adjusted volume oscillator. So that 39 had to catch up, and it eventually did up here. But by then, there was a pretty good upside again a couple of days later. So the breadth and volume oscillators were doing their job there, giving us an early warning of a change in direction. And then again, in the bottom window, stocks only AD line, after that pretty nice run up, there was another further upside move, as you can see with the blue arrow pointed up. However, the breadth and volume oscillators were pointed down, and of course the 39 EMA of the ratio adjusted stocks only volume oscillator here was still pointed up a little. Needed to get on board, and eventually did. However, by then, a couple of days later, there was a huge downdraft. So another early warning by the breadth and volume oscillators, as you can see up here in price. And I believe back then I was drawing big M right here, and it went down a lot further than the measure rule. You can go look at that video if you can find it. I'll see if I can link to it. And again, starting in the bottom window, stocks only AD line, you can see the downwards trajectory from the downdraft. Looked like it was changing, but still pointed down. However, the volume and breadth oscillators started pointing up, and again, that was an early warning for a change of direction to the upside a couple of days later. And next up, it changed back to the way the AD line in price normally operates in the mainstream way. So the previous instances, we were just looking at our opposite of normal mainstream thinking of the way these AD line and oscillator and price work. So you can see that there's a downwards trajectory in the AD line, but an upwards trajectory in the breadth and volume oscillators. And before that was a warning of change of direction to the upside because of the divergence in AD line going down. However, on that day or a day later, the next day, there was a precipitous drop, and that was that huge downdraft that we just experienced. And you can see price also pointed up, this blue arrow up there. So price was pointed up along with the breadth and volume oscillators here, and the AD line was pointed down. So that's how it normally works. So that was reverting back to mainstream thinking of that AD price / oscillators thinking. Next up here, this red arrow in the AD line stocks only right here pointed down. This is where I really started taking a closer look at this, as you can see that the McClellan volume oscillator diverged from everything else. The stocks only AD line, stocks only volume, and the McClellan breadth oscillator ratio adjusted here. I mean, I've just thought about it for a long time. It's like, what does somebody know that we don't know? As you can see, volume was increasing, so somebody's pouring into this here as things were going down. And you can see it right here. There was a pause in price, and then the last leg down here. And then on this final one, the breadth and volume oscillators were winning out, but notice I have them up in the bearish divergence area, and the AD line stocks only is up in the bearish divergence area. So I have the AD line going down and the volume oscillator here, and then the McClellan breadth oscillator pointed up. The 39 volume for stocks only is still pointed down, and that seems to be the normal reaction. So we're really paying attention to these short ones here, this 19. So what this is telling me, that it's not agreeing with the bearish indication of the stocks only AD line red arrow here, this last one here. And here we can look at it closer in the thumbnail. The New York McClellan breadth oscillator NYA at the top, McClellan volume oscillator here, volume for the stocks only AD line 39 in red, 19 in blue, and then finally the stocks only AD line. So not as bearish. And then sure enough, price did take off, and you can see the price arrow here from that same area pointed down to the top of this. So what I'm saying is that it's still a bearish divergence until this here, this blue arrow in price, and all these other volume and breadth oscillators down here all start pointing the same way here, these three along with the stocks only AD line. So right here is September 29th, and also the 39 EMA of the stocks only volume oscillator. So this needs to start pointing up too, along with the AD line for stocks only and price. And you can see that here again, that price trajectory arrow pointed down on the bearish side, meaning on top of the candles. There's nothing on the bottom. And if we did have arrows at the bottom, you could see that everything is pointed bullish. If we had one on price on these two candles, it would be pointed up. And then the same thing with the McClellan breath oscillator, be pointed up, 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 everything pointed up. So what I'm saying is we need to see this divergence on the bearish side up here get fixed or rectified, I call it. So we need to get these pointed up, this 39 EMA, the stocks only AD line and price, and that's to exceed the price level on the 29th of September. So we'll translate all that New York data that we just looked at, all those oscillators and stocks only AD line and price, over to the S&P 500. So the 29th was right there with a high of 4333.15, and that's slightly into no man's land, as we know. And that's anything above 43.25.28. And this pitchfork level 2 here, it starts up here as 4, 3, 2, 1, and this is the 0 line down here. So pitchfork level 2, its level is at 4333.10. Here, I'll move this down. And you can see that the S&P 500 weekly levels are the ones to watch. So this weekly baseline for the cloud, and then this weekly broadening top and dashed red from 2018, that thick dashed red line that we've looked at, and the weekly channel 3 low, 43.16. Those are the levels to get above, and then get to this 4333.10 level. We need to get above that, and those divergences over in the NYA chart that we just looked at will be repaired or rectified to the upside. We'll have all the arrows pointed up. So this is a critical level. Gets above there and starts moving up, then it's the bottom of the cloud 26 bars back that we've been talking about here, and the levels around there are indicated in that bright green here. So that trend factor down to upper stark band, which will probably move up into the 4350 zone, and the 20 simple moving average, which is still in a downwards trajectory, so it should be pretty close to this cloud level here, and the daily high channel 3, 4352. So it has a couple of major hurdles to get past, and this pitchfork 2 level, 4333.10, is the first one to get above, and that would be a major move. And I would say that we are headed up to test that bottom of the cloud 26 bars back concerning the lagging line.